What is Forex? Forex, also known as foreign exchange or FX, is the marketplace for trading all the world's currencies and is the largest financial market globally. The Forex market is where currencies are bought, sold, and exchanged at the current or determined prices. Unlike other financial markets like the New York Stock Exchange or the London Stock Exchange, the Forex market is decentralized. This means it's not controlled by any central governing body. There are no clearinghouses to guarantee the trades, and there is no arbitration panel to adjudicate disputes. Forex trading involves the simultaneous buying of one currency and selling of another. These two currencies make up what is known as a currency pair. For example, euro to US dollar is a currency pair. Let's look at a couple of examples. Buying a currency pair. If you believe that the euro to USD exchange rate will rise, you might purchase the euro to USD pair. This means you're buying euros and simultaneously selling US dollars. If the exchange rate rises, you'd sell the pair back at a higher price, making a profit. Selling a currency pair. Conversely, if you believe the USD to Japan yen exchange rate will fall, you might sell the USD to Japanese yen pair. This means you're selling US dollars and simultaneously buying Japanese yen. If the exchange rate falls, you'd buy the pair back at a lower price, making a profit. Remember, the Forex market is highly liquid, meaning a large amount of trading takes place daily. It also opens 24 hours a day, 5 days a week, which allows for continuous trading during weekdays.